Okay, everyone, this is going to be a detailed Elliott Wave analysis on the daily, the 1 hour and the 15-minute time frame, and this will likely be a longer video as well because there's a lot to talk about. So we're going to start on the daily time frame. On the daily time frame, the probabilities have not changed compared to previous content. The probabilities and the bias remain highest for price to move up, and as a bare minimum, we're looking for a larger range. The probabilities are lowest for this high to be a significant high and for price to move down into the lower 50s. Now the bullish scenario is on my chart, a leading diagonal to the upside in a wave 1 or A, and preferably a finished wave 2/B, being a simple zigzag ABC. The reason why preferably 2 or B is finished is because price moved up to touch the 0.7 Fibonacci at 72.7k, taken from the high to the low. Now that decreases the probabilities for a double zigzag WXY ABC. That's your W, wave X, ABC, and a wave Y. It is, however, not an invalidation. Now, because the 0.7 decreases probabilities for a WXY double zigzag, but after a diagonal, it is most common to see zigzag family structures as a correction in 2 or B, preferably your 2/B is finished at the 65k low. If price were to move down, though, and go below 65k, the bulls are still looking for a WXY, which means a wave A, wave B, and a wave C to the downside, and then turn around to the upside. The bearish scenario at this moment is a continuation of the range. But if price locally takes out this high one more time at about 73.2k, the probabilities on the daily time frame will switch from bullish/range to neutral, and then the local price action will decide the probabilities, and I'll explain this in more detail when going to the 1 hour and the 15-minute time frame. So at the moment, with the price action that we have here, the probabilities are low that this is an impulse, a finished impulse at this high. If price were to fall here and move below, let's say 70k, about 70k, the probabilities are higher that this is corrective, increasing the probabilities for a move down. Now this means we're either looking for the bears for a WX and then a triangle in a wave Y, A, B, C, D, E, and then price eventually falls. Or if price continues falling to below 65, we're always looking for another move up. Probabilities are then by far highest to see a continuation of the range and for price to take out 65k and move towards the upside afterwards. Okay. If the move towards the upside here creates at least another high, which then has to be a wave 5, in an impulse, 1, 2, 3, 4, 5 wave structure, we want to see another high, decreasing volume. Internally on the lower time frames, we want to count a 5 wave structure to the upside here. And then we like a structure to change, just to confirm something is finished here. We're not working on multi-1-2s for acceleration to the upside. So if the structure then changes, well, there is then the possibility for the bears to finish a corrective structure in a WX and then a wave Y then being a running flat structure. So possibly you then have something finished. After wave Y, you would need a motive wave to the downside to look for lower and go below 60k. If the move to the downside is corrective, probabilities are bullish. Yeah. So let's go to the 1 hour time frame. So on the 1 hour time frame, we have this move up since 65k. The probabilities are low for a finished impulse, which is what you see on my chart at the moment. The reason is this: the 0.618. The 0.618 is a very rare target for a wave 4, very rare. And the moment it's touched, the probabilities are very low that this is a wave 4. It would be hindsight counting, really, if this would turn out to be a wave 4. So just because of this, the probabilities of this whole scenario are low. 1, 2, 1, 2, 3, 4, 5, 4, 5. If, however, you would have a finished impulse, you look for at least a retracement to 70k. Right? Doesn't matter if it's corrective or motive, you like to see at least 70k touched. Now then we get to an impulse to the upside, which I prefer, which is a 1, 2, 1, 2, 3, 4, 5, 4, 5. Now, sure, I can add another 1, 2 here and add another 4, 5, but at the moment that's not relevant because you at least need to finish 5 here. Then maybe you get another 4, 5, and we just add a 1, 2 in the beginning. But nonetheless, you're looking for price to move up, right? Now, in this particular scenario, we then have 1, 2, 1, 2, 3, 4, 5, 4, 5. No overlap between 1 and 4, no invalidation. Price created another high. This move locally can be counted as a 5-wave structure. Probabilities of yesterday are played out. Very nice. And now we see a local retracement. In this scenario, we like to see a sideways wave 4. Preferably, this wave 4 is finishing at least after Saturday, tomorrow, the 11th of April, 11 a.m. Central European time, minimum. So ideally, we're looking for a bit of a shallow sideways corrective structure. The target area for your wave 4 is 71.6, 70.4K. Reason is that a wave 4 of a higher degree tends to retrace to the price action of wave 4 of a lower degree. And if I would quote the book to be a bit more specific, then the book Elliott Wave Principles says that a wave 4 of a higher degree tends to retrace to the termination point of wave 4 of a lower degree, which would be this low. So that is why this box here is basically the 0.236 Fibonacci, taken from this low to this high, to the low of the lower degree wave 4. Ideally, I don't like to see overlap with this structure here. So that is why earlier on the daily time frame, I said that ideally, I don't see price move down to 70K if we're looking for an unfinished impulse. If price moves down to 70K and starts overlapping with this structure, the probabilities decrease. You're still looking at a wave 4, right? And then the probabilities increase. Something is finished here. And if something is finished here, probabilities are higher. This is corrective. Okay. So this is still a bullish scenario. It's a 5-wave structure, but it opens the door to bearish scenarios. 1, 2, 1, 2, 3, 4, 5, 4, 5. If 5 finishes here, and 5 internally, of course, has to be a 5-wave structure, we want to see volume decreasing as price then moves towards the upside. And we like ideally to see a structure change. Just to confirm, or I should actually say just to invalidate the potential of a multi-1-2 to the upside here, which of course is by far your most bullish case. Now, if that were to happen, you move up in 5 waves, price then slows down, decreasing volume into resistance, and price moves down far enough to change the structure. The retracement decides the probabilities on the daily time frame. If price takes out this high, the probabilities on the daily time frame switch from a bullish bias, taking out 76K, and as a minimum, look for a larger range, but there's no high probability bearish case. If price takes out 72 or 73.2K, the probabilities on the daily switch to neutral, because now the new price action will decide the probabilities on the daily time frame. If you have 5 finished waves, this move to the upside could be your wave Y, as explained on the daily, which means that if you get motive waves to the downside, 5 down, 3 up, 5 down, 3 up, and boom, you're looking for price to move below 60K, no? If the move to the downside turns into a 3-wave corrective structure, well, then we're looking for price to continue up. But it depends on the retracement, and we don't yet have that information, so we'll have to wait and see. Right? It depends on the retracement. Besides this being a bearish wave Y, a wave 5 or a 5-wave structure to the upside here could also be another wave 1 for the bulls. Right? You have your wave 1, wave 2, get another 1, another 2, and then price continues towards the upside. Right? It's also a possibility. But then again, it depends on the retracement to the downside. So first of all, we'll have to wait for a move towards the upside, which we preferably see in this particular scenario. Ideally, wave 4 finishes after Saturday minimum. Then we get a wave 5 towards the upside, should be a 5-wave structure. We like to see move up, decreasing volume. Internally, we want a 5-wave count towards the upside. Price turns around. Ideally, it changes the structure. Okay. Then we get to the most bullish scenario, which is not out of the possibilities. That's why I show it in the video. So a multi 1-2, 1-2, 1-2, and just keep stacking 1-2s in this particular scenario. As the local move to the upside here can be another wave 1, we would look for another wave 2. Ideally, this wave 2, however, is shorter than your wave 4. Wave 4 in ratio would be similar to a 2. Your wave 2 here is ideally going to be similar in size to your higher degree 2s or shorter in time, in size. Okay. So in this scenario, it would be nice if this wave 2 would maybe end the corrective structure on the Friday, maybe early Saturday, and then during the weekend you grind up a little bit, maybe you take out the high, and then next week you go. Option. By all means though, you want a higher probability corrective structure to the downside on the 15-minute time frame, which is what we are going to check later in the video. The invalidation is a market structure change, 70.5K, 70.4K here is the invalidation if we are looking here for a multi 1-2. This is by far your most bearish scenario, as then you're looking for continuation to the upside. And yesterday or was it this morning? I think yesterday in Discord, we were maybe a little bit joking about it, but you know, there's definitely an opportunity or a possibility for a multi 1-2. So here we were just talking about like Joan 1-2, 1-2, 1-2, 1-2, and then I was like, you know, I just drew this on my chart 1-2, 1-2, 1-2, 1-2, and then after this I started to actually look into it and be like, well, let's just put it on the chart and show it in the video today. This is the low at 15K, right? 1-2, 1-2, 1-2, 1-2, 1-2, and then eventually you get the push towards the upside. So as long as you're not changing the structure, as long as price is creating 5 moves up, 3 moves down, right? 5 waves up, 3 waves down, you have to be aware of the potential of a multi 1-2. It's just got to be in the folder, right? What we like to see for this, compared to an unfinished impulse where you look for a 5 and then preferably a structure change, is no structure change. That is why specifically in this scenario, I talk about finish 5, look for a structure change, because wave 5 is a 5-wave move to the upside. But so is another wave 1. That's also a 5-wave move. But if you get another wave 1, you look for 2 and price to continue. So you're not seeing a market structure change. You see another higher low. While preferably if we're looking at a 5, we like to see that market structure change, just to throw away the multi 1-2. That is why the structure change is so important for the probabilities of the two scenarios. So in this scenario, ideally at some point, of course, you just get the big push, you get wave 3, volume is increasing, large candles, etc., right? Just like the 15K low and eventually moving up to the 230K. That is what you want to see. If you get another 1, then 1, 2, 3, 4, 5, retracement, 5 waves up, 3 waves down, 5 wave up, 3 wave down, 5 up, 3 down, etc. Right? That's what you're looking for continuously. So every new range that is forming is going to be very important, and that is a range that we will analyze. And then finally, your bearish scenario. The bearish scenario here would lead to a move to the downside. On the daily time frame, this scenario leads to a continuation of the range. If price creates a motive wave down, and we're looking at a retracement, and we will go to the 50-minute time frame, so you will know how to judge probabilities locally and how probabilities change. But this WXY to the upside, ideally finished at the high, 73.1K in that case, would be a continuation of the range on the daily time frame, where you want to have a motive wave down. You would look for price to take out 65K, or we have that triangle, A, B, C, D, E, continuation of the range, and then go down. This is your most bearish case. If you go straight down, you would look for another move up. Okay, so we'll have to wait and see. It depends on the local price action, right? It doesn't make, to me at least, it doesn't make any sense to really put one particular scenario on the pedestal and say, oh, this is the highest. No, it's not the case. It depends on the local price action, what the highest probability scenario is. If this is possibly motive, you got to be at least aware of a bigger move down. However, if this is higher probability corrective, you're looking for a move up, and then it depends on the move up, right? So we use the information that's on the chart to decide the probabilities. We're not hypothesizing about, well, the multi 1-2 must be the highest probability. No, that's not the case, right? If this turns motive, we're looking for price to move down. So we'll take it step by step. So now we go to the 15-minute time frame. On the 15-minute time frame, so price took out the high, very nice, retraced, okay, cool. The question then is this move to the downside an impulse, a diagonal, or a multi 1-2? Because that is what the bears are looking for. If you want to look for deep downside, deeper retracements, move below 70K, bearish scenarios in general, you want to see a motive wave to the downside, and you want to have at least decent probabilities. Well, if we're looking at an impulse to the downside, then we need a wave 1, 2, 3, 4, 5. The issue here is that your wave 2 or B, as I show here, is very long in time. Again, it's very similar to what happened here. Oops. Mate, can I, yes, the brush please. What happened over here? Quick move down, range. And in the content of yesterday, I said if you move above 71.7K, now at low probabilities, you're looking at a 1, 2, 3 or an ABC because of time. Same thing here, but now the relevant high is 72.2K. So if price here, right, 1A, if this turns into a larger 2B and moves above 72.2K, that's not great for this scenario. Right, an impulse, not high probabilities at the moment. A multi-1-2 has the invalidation at 72.3K. 1, 2, 2 is then a WXY with a little flat here in wave Y. Another 1, another 2, look for price to move down. Invalidation, 72.2K. 72.3K really. So this high is very important because if price can hold on to this low, move up above 72.3K, it invalidates a multi-1-2, most bearish option. It really lowers probabilities for an impulse, and like a multi-1-2 would have higher probabilities than this, but only if price moves above 72.2K. You can't count a multi-1-2 anymore, so this takes over 1, 2, 3. But then your 2B is over 10 times, by then maybe 12 or 13 or 14, 15 times the size in time compared to your 1RA, low probabilities. So in other words, if price takes out 72.3K, invalidates a multi-1-2, low probabilities for an impulse to the downside due to the size of 2B. If anything, it's preferably a B than a 2. And then we have the diagonal. Well, the issue here for a diagonal is you need another low. So if this low holds, price moves up and goes above this high, you're also going to reach the invalidation of a contracting diagonal. And a contracting diagonal is your most common diagonal. If anything, let it be contracting, not expanding. Expanding is rare compared to contracting. While a contracting leading diagonal, because this diagonal, which then is counted as 1, 2, 3, you look for 4 and 5, a leading diagonal is by itself an uncommon structure till proven otherwise, because after your 5, you then look for a corrective move up. Now you want a proven corrective move up, and that is when the probabilities for a diagonal start to increase. And the potential for a diagonal start to increase. But here you're looking for another low. You want another low. You only have 2 lows here. You need another one. So if price can hold on to this low, move up, and take out 72.3K, it invalidates a multi-1-2 to the downside. It invalidates a contracting diagonal. Expanding is very rare. And the probabilities for an impulse to the downside, a larger 1, 2, 3, or ABC is of course bullish, but a larger 1, 2, 3 is low. Which means that if this low holds, price moves up above 72.3K, the probabilities are high to take out the high at 73.1K. If price moves below this low at 71.4K before taking out this high at 72.3K, there is the potential for a multi-1-2 or the diagonal. And then future price action will let us know. Because for a multi-1-2, you need another 5 wave down, right? Or just falling in a straight line, but maybe another wave 1, 5 wave move, another 3 up. Which means then the invalidation, if you get another 5 down, the invalidation is going to be the lower high over here, which we don't yet have, right? We'll need to wait. And then you need price to go down again. You don't want the structure then to change. Now, this also means that what's happening here on the 15 is very important for the daily time frame probabilities. If price can hold on to this low, 71.4, move up above 72.3K, it means that the probabilities on the daily time frame move from a bullish bias upside / continuation of the range to neutral. Because now your probabilities are highest to take out the high, which means that there is on the 1 hour time frame then the potential of looking possibly for an impulse to the upside, a 5-wave structure. So we'll have to wait and see what the move to the upside then becomes. Probabilities are highest to see a move to the upside. Mind you, if you take out 72.3K, sure, we can create a larger range, right? Remember, potentially the wave 4, no problem, right? You can create a larger range. It's just that the probabilities are highest. The bias is towards taking out that high, which means that on the daily, probability switch from upside slash range, or so bullish bias, upside slash range to neutral, because now the information, the new information is going to decide probabilities. If price moves up, takes out this high, is volume increasing, large candles? Is price curving from more vertical price action to, or horizontal price action to more vertical price action with increasing volume, right? Something like this. Is this what you're going to get? Do you get more 5 waves up, 3 waves down locally without a change of structure? Do we get a 5-wave move towards the upside on decreasing volume and price changes structure? That's at least what the bears as a minimum want to see, right? So it depends on the new information. Arguably, I could say that on a daily time frame, thinking about it, the probabilities remain bullish unless price creates a 5 up and changes the structure. That is the moment where the probabilities are neutral. Maybe that works better. It's bullish unless price creates a 5 up, goes down, changes the structure, invalidating a multi-1-2. We would look for possibly then a finished impulse to the upside here. That's then your probabilities. And then the retracement matters. Motive or corrective. Motive bearish, corrective bullish. Right, so maybe that is a better explanation of how the probabilities change. Okay. So that does mean that if price moves up, takes 72.3K, probabilities would still be bullish on the daily. You need a 5 up, you need a 3 down, or you need a move down change structure to turn bearish really. Okay. Let's have a look at the support and resistance levels. So I have this going on locally. I had a very a little mini order block. Didn't really expect too much, and here we are. But yeah, you can see this is what I have going on locally in this range. And if I zoom out a little bit, you can see more areas of support and resistance. Then we have the news as well. So this is the news today, 2:30 p.m. Central European time and 4 p.m. Central European time. 2:30 would be more important. Just be mindful of volatility on the chart and a trade safe. And then we get to the conclusion, which is quite big. And I will change a small little part of the conclusion as well, as per the recent information with 5 up change structure. But anyway, on the daily here, currently the probabilities remain the same. Higher for upside / a larger range. That's the bias. It's lowest for the bears and straight downside to low 50s and whatnot. If price locally creates another high above 73.1K, this is what I now have to change actually. The probabilities on the daily switch to neutral. So we can change this to if price creates a 5-wave move up and then changes the structure, that is when the probabilities switch to neutral. The probabilities are higher for the bulls until this happens on the daily time frame. All right. 5 up, go down, change the structure. If price here moves towards the upside, takes out this high at 73.1K, if volume is increasing and price moves more and more vertical and continues with 5 up, 3 down, 5 up, 3 down, every new range has to be analyzed. That's bullish. If volume is decreasing as price moves towards the upside, right, on a 1-hour time frame, and we can finish a 5-wave structure, and we get a retracement to the downside here that changes the structure, then the retracement matters. Probabilities on the daily become neutral, and the question is going to be, is this retracement going to be corrective or motive? Motive is bearish, because then you have 5 down, 3 up, potential for continuation down. Corrective means 3 down and then eventually look for price to move up. We don't have that information. We'll need to wait and see. No need to think too far ahead. On the 1-hour time frame, If price falls to about 70k, the probabilities are higher for a finished WXY towards the upside, a finished corrective structure. From the low at 65k, instead of a finished impulse, because that impulse touched the 618. So preferably, if price were to fall below 70k, we're looking at a WXY, which then on the daily increases the probabilities to just continue the range between 80 and 60. Ideally, bears actually want another high to finish a potential 5-wave to the upside here with decent probabilities and no 618 touch for wave force. And then they want to see a motive retracement. So short-term pain, get a move up, and then you want 5 waves down, 3 waves up, continuation to the downside. This is ideally what the bears are looking for. The bulls look for corrective movements down and continuation up. 5 up, 3 down, 5 up, 3 down, 5 up, etc. Maybe locally another 5 up, 3 down, continuation, or 5 up, and if you change the structure, they need a 3 down. Too far in the future, right? Doesn't make sense to. I just want to explain what to look for, right? When we see that, but of course we don't know if we get that yet, right? It's just how do probabilities change, what to keep in mind. On the 15-minute time frame, at the moment, we have to wait for information. There is the potential for bearish structures. Do they have the highest probabilities? Well, difficult to say at the moment with the information that we have. A multi-1-2 is an option. But ideally for a multi-1-2, this continues down and eventually you see volume increasing and you like to see the structure change. You want to see 70k touch. If you touch 70k, you move below 70k, the probabilities are higher to see a deeper retracement. So that would give at least a little bit of confirmation for looking for deeper moves towards the downside, right? Of course, now we're at 72, so moving to 70k, it's a 2k gap, but at least it gives more confirmation because at the moment, there is no confirmation locally that this is a multi-1-2 or it is a diagonal or it is an impulse. If price, however, continues with 5 down, 3 up, 5 down, 3 up, then sure, you can short the 3 up and then eventually look for price to move down and you'll be part of the move. But you will have to confirm a 3-wave move towards the upside, which at the moment, we cannot confirm here a 3-wave structure to the upside. Possibly this is a 1-2, 1-2, and a 3. Maybe this is ABC, WX, ABC, Y. Like it's low time frame stuff. We'll have to wait and see. No, there's no confirmation. Well, for the same thing for the bears is this a confirmed corrective structure on the chart here? No, it's not. It's not yet, at least, right? Bulls have to be patient as well. So the bulls want to wait for the bearish motive wave options to be invalidated or at least lower in probabilities. If price can move above 72.3k, which is this high here, without first going below 71.4k, then the probabilities are higher for the bulls to take out that high. Now, bulls can create a larger range. That's absolutely no problem. But the bias is take out that high. Okay? And then you need to have a plan and a strategy to trade in a direction of the directional bias. That's on you. I just communicate Elliott Waves. I'm not a financial advisor. I just show what I see and hopefully it's useful for everyone. Okay, if price first moves below 71.4k without taking this high at 72.3k, the probabilities are also initially higher for bulls. But we have to be aware of the bearish diagonal and possibly a multi-1-2. So I'm actually not too sure on how I wrote this because if price creates 5 down, 3 up, 5 down, 3 up, of course you're looking for bearish continuation. And if this is a move down and price then changes structure, be aware of the diagonal. So that's basically what I want to say. So it's not written very well. So this is what is going on. So to summarize even the conclusion, because it's quite long, and this is a long video, sometimes it's the way it is. On the daily time frame, the probabilities are highest for the bulls. Minimum, a continuation of the range if price were to fall from the local high. You're just looking for a continuation of this range. You're not looking for straight downside. Probabilities are highest for the bulls on the daily, minimum continuation of the range. If price takes out this high, the probabilities are highest for the bulls. If price creates locally a 5 up and then changes the structure, probabilities on the daily switch to neutral. And the retracement matters. Is this corrective? We look for price to move up. Is this motive? There's the potential for finished corrective structures and for continuation down. We will analyze this. On the 1 hour time frame, probabilities are low for a finished impulse. If anything is finished here, it would be a corrective structure, highest probabilities. The bulls want to see 5 up, 3 down, and just continue because of the potential of a multi-1-2. What also works is get a 5 wave up here, and then a larger corrective move down. Sure, you change the structure, but if it's corrective, you look for price to move up after. Now, price moving up to take out this high depends on the 15-minute time frame. On the 15-minute time frame, if price can move above 72.3K while holding on to this low, so just move up a bit further, probabilities are highest to take out that high. Unrelated to a continuation of the range, larger corrective structure, maybe you go down to the little bit lower support that I have here. It doesn't matter. That's the bias. The bias is take out that high. So that's the directional bias that we then have from our Elliott wave analysis. And then we can look for opportunities depending on someone's plan. No? So that's on the 50-minute time frame. If price takes out this low first, before taking out this high, there is the potential of a multi-1-2 to the downside, 5 down, 3 up, 5 down, 3 up. However, with the recent info, did price touch the 886? If price touches the 886 here at 72.2K, probabilities decrease for a multi-1-2. It's not an invalidation, but it does decrease probabilities. So we can just have that on the chart while I'm still talking. And a diagonal is a possibility if you take out this low as well, which then requires a move back up, which has to be corrective because diagonals do not have the highest probabilities till proven otherwise by corrective retracement, basically. So long video, hopefully educational. Even in this video, you can see me change some things on the spot. Initially, I was like, well, take out 72.3K or take out 73.1K probabilities on the daily switch to neutral. And then I'm like, wait, that's actually not true because we need 5 down, 3, 5 up, 3 down, change the structure to really change the probabilities to neutral. So, yeah, like I think longer videos give you a bit more insight in my thinking process. It's a very long video. We cover multiple time frames, multiple scenarios. There's a lot of theory in this video. It's definitely not for the lighthearted here. This video is not a beginner Elliott Wave video. So yeah, hopefully many people are able to follow this. If not, just ask questions, right? And I will be very happy to answer any questions if you don't get anything, or go to Discord, which is absolutely free. Link is in the link tree, link in the description. And you can tag me there and answer questions and whatnot. Plus, there's many people doing Elliott Wave Analyst and are happy to help out. So, you know, hopefully it's useful. Hopefully it's valuable. And in the end, we will see what the chart is going to give us. We take it step by step. We take it wave by wave. We know what we're looking for. We know the probabilities. We understand how probabilities change with new information coming in. And yeah, hopefully you got an idea of how to analyze this range, the move towards the upside since 65. And then again, if you have questions, put them in the comments. And if people don't understand Elliott waves or never studied Elliott waves and give stupid comments like write stupid comments, then you can expect a stupid comment back. Very simply, right? It doesn't make much sense to bash an Elliott wave video. Because most of the time people show their lack of Elliott wave knowledge by commenting stupid stuff in the comment section. So don't be that guy, be a smart guy. And if you don't understand Elliott waves, ask for educational questions because I'll be happy to answer them. So thank you for watching. That's going to be it. Hopefully this video was helpful or valuable. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.